Welcome back to school after your Christmas break. Hopefully, it was a good one for you. And now we will begin the second semester in this year long course in accounting. We're looking at the basics of the field of accounting, and you've successfully completed Accounting 1, and now the second semester deals with Accounting 2. And I want to tell you a little bit about what we will be doing in the second semester. A couple reminders though. First of all, be sure you check your course announcements every day so you don't miss any important information that I give you. And there's a place on the course page at the top dealing with basic information, and that is important for you to look at as well. I know you've already had a semester in this course and you're familiar with how it works, but I've added some information there that you need to be aware of. So make sure you look at that little section called Basic Information. And as I did in the first semester, I will continue in the second semester with a daily prayer. So I'd ask you to begin each day with reading that prayer. On your screen, you see a brief outline of what we will cover, so you have an idea of where we're going here in the second semester. We will be doing more work with the accounting cycle, as you can see here. We will be starting with basically where we left off in last December with topic number 7, dealing with cost of goods sold. We began that topic, but we're not finished. We need to add more to it, so we'll start there. We also, later on, will talk about something called depreciation. You've had a number of transactions in the first semester where a company may have purchased a delivery truck, for example. But what we didn't talk about is what happens in the years after that purchase. We may buy a brand new truck and pay with cash, or maybe take a loan out to pay for that truck. But after a few years, that truck begins to wear out. It depreciates. And you may well be aware of that if you are looking or have looked at buying a used car, for example. Cars do decrease in value as any major asset, and businesses need to understand how to deal with that, and we'll be talking about depreciation. Then something called closing entries we will look at. I mentioned a number of times in the first semester about accounts like revenue accounts, the sales account, for example, and the expense accounts that have zero balances at the end of an accounting period. And we'll talk about how that's done and, more importantly, why that's done. Most accounts, cash, for example, accounts payable, for example, have balances that carry over from one accounting period to the next. But for some reason, revenue and expenses are closed, and we'll find out what that means and how that works. We will also look quite a bit at different kinds of journals and ledgers. We've had just one general journal and one kind of general ledger. Now we will be talking about something called multi-column journals. Instead of just one debit and one credit column, there will be more columns to use. It sounds like that may be more complicated, but actually it's not. It's going to be a time-saving method that accountants use. So we'll see different kinds of journals, and we will look at subsidiary ledgers. Unlike the general ledger, the subsidiary ledger will keep track of customers that owe us money, or it will keep track of creditors to whom we owe money. So we'll find out how those work. We'll be dealing with more detail with sales and purchases. For example, sometimes we give a customer a discount. If that customer is a very good customer of ours, perhaps we'll give him or her a discount. And sometimes we get a discount, particularly if we pay our bill early. Companies will perhaps give us a discount. And sometimes, unfortunately, sales are uncollectible. Sometimes customers charge something from us and then don't pay us. So we have to, unfortunately, know how to handle that. And then if we have time at the end of the semester, we'll talk about some other financial statements in addition to the balance sheet and the income statement. I want to look at the tab at the bottom, one of the tabs. If we scroll down, uh, this tab shows the payroll entries that may look familiar to you. This is from the uh, semester exam that you had in December, one of the problems you had to do. And this talks again about those payroll accounts that we had to deal with. And those should be very familiar with you or to you by now. But this is a reminder if you need to go back and double check some things. Instead of just debiting salaries and crediting cash, we have to keep track of all of these payroll deductions and payroll taxes that companies need to take out of employees' paychecks. And we also have to understand how FICA tax is a little different than the other ones, because not only do the employees have to have it deducted from their paychecks, but we have to pay it as well. So that's what this problem was about. These entries indicate quarterly payments of federal income tax, state income tax, city income tax. Down here, the last two dealt with another problem that you had where we had to allow for and keep track of the FICA tax that the company has to account for, and then finally the payment of the FICA tax, including $12,000 from the employees and the $12,000 from the employer in this case. So those are a bit of review. We're not going to be doing problems again with payroll necessarily, but I thought since we've been gone for a couple of weeks, it might be good to do a little bit of review. Let's look at another tab at the bottom. This also is a problem that you had in the semester exam. And I want to mention this because this is kind of the jumping off point for topic 7 as we will begin tomorrow, actually. This was the Ace Hardware store, and we have a series of transactions, and we have them over to the right. We bought inventory for cash, and we had to put it into the journal, and then we had to post it. And we bought more inventory, this time on accounts payable, in the second transaction, and it was charged this time. So we bought inventory 2 different occasions. In both cases, the inventory cost us $80 each for these items. And then we made some sales. We sold 500 of these items for $100 each, and we had to record that in the journal and then post to the ledger. And the key entry was at the bottom, the cost of goods sold. Just as a review, remember how we got this. We sold 500 items at $100 a piece. The cost of goods sold entry deals with the amount that those 500 items cost us. And what I'm showing you here is the computation that you should have used to find out what that amount would be. 500 items sold at the cost that these goods were to the store. So the store paid $80 a piece for these 500 items, and you simply multiply 500 times 80, and you get 40,000, and the arrow there shows you what the entry looks like. So most of you did well with that, but what I want to talk about now is a situation that's more realistic. In this case, the company bought items at $80 each 2 different times. Now, what happens in the real world is that eventually these items are going to cost more. So in a more realistic situation, maybe these items purchased on December 19th cost $90 each instead of $80 each. So the question is then, how do you handle that? We sold 500 items. Do we say they cost us $80 each, or do we say some of them cost 80, some of them cost 90? So that's where the complication comes in. The fact that when we figure cost of goods sold, we have to find a method that will adequately describe the true cost of those items that we sell. So we'll be talking more about that tomorrow. At this time, I'd like you to go back to your course page and answer some questions.